Did we finally hit a bottom here? Did the market bottom out? With only one green day in the last 8 trading days, we are sitting at the 200-day moving average. In bull markets, the market does not visit this level often. As a matter of fact, all of 2024, we did not visit this level once. And if you watch my last video, I told you we're likely to hit this level next because of the data that simply says every single time the market does not hit the 200-day, it follows up the next year, hitting the 200-day 100% guaranteed. So is this the bottom here? As always, I'm going to answer that question as best as I can. I've led you guys through the whole way. Told you that my level for Tesla was 275. My level for Bitcoin was under 80K. I told you guys that I don't think that the sell-off is over when everybody was saying that this is just a short-term pullback. I told you that I thought both the NASDAQ and the S&P 500 would hit the 200-day moving average. So I'm really doing my best. And it is the most honest analysis you'll find. There is no fear mongering. There's no other intention behind it except for to give you what I see in the market. And so far it is done really well. And I do have something personal to comment about, but I'm going to leave it until the end of the video. So let's get right into it. As I told you before, the White House is giving you the blueprint. They are telling you what they are going to do. I don't know how many times I have to say this, but everyone talking about, is this the bottom for stocks? This is the bottom for stocks. The White House is telling you they do not give a crap about stocks. How many times do Trump and Bessent have to mention yields before you realize that that's all they are focused on right now? So I gave a few examples of recently when they've done this. Bessent said, in 6 to 12 months, this will become Trump's economy. He said the housing market is stuck now, but will unfreeze in weeks, meaning he expects the 10-year to come down. He also said that the Treasury anticipates maintaining bond issuance. So when you overload the market with bonds, then yields go up. When you limit the supply of bonds in the market, then bond traders and bond investors will rush to grab those bonds, lowering the yield. He even said about him and Trump, he and I are focused on the 10-year Treasury and what is the yield of that. He didn't say we are focused on the S&P 500. He said we are focused on the 10-year Treasury. And then just today, he said something new. This is what he said.
I think over the medium term, which is what we're focused on, it's a focus on Main Street. Wall Street's done great. Wall Street can continue to do fine. But we have a focus on small business and the consumers. So we are going to rebalance the economy. We're going to bring manufacturing jobs home.
So he said we are focused on Main Street, not Wall Street, even though in my view, that is kind of a pretty stupid way to put it because obviously Main Street owns a lot of stocks. So a lot of people, including viewers of this content, are really worried about their portfolios. Obviously, their investments, their IRAs. It's not like, Main Street doesn't own any stocks. Either way, they are giving you the blueprint, telling you that there's going to be pain ahead. They're telling you this. We've never really had an administration, I'll give them this, that is that honest about where their focus is currently. But they're clearly trying to lower yields, and they know that the end result is going to be that the market is dropping, right? It's not like they want the market to tank. They really want yields to tank, but they know the result of that is that the market will also drop because everything that you do to lower yields slows growth, the cutting of jobs, the cutting of spending. But their hope is that then after the pain and the yields get lowered, they're hoping that the Fed will then cut rates because the economy will be in a worse shape. And then they're hoping to reset that and start a whole new decade of growth. So here's what I wrote today in the morning. I said the Qs finally hit a correction. NASDAQ did hit a correction of minus 10%. The SPY is at the 200-day moving average, which also coincides with the election candle. I'll tell you what that is in a second. There's divergence between the price and the RSI. This is the most important thing here. I said a technical bounce is likely coming along with a potential Trump put. Now, this is very vital, so I'm going to take a second and explain it real quick because I obviously got a ton of questions on, what does a Trump put mean? When we talk about a Trump put or the Fed put, a put obviously comes from the word put option, right? And a put option is a kind of an insurance that you buy in case you have a drawdown in the market, right? In case the market turns down, you have puts. You protect your investment by buying protective puts. So that's where that word comes from, even though it's kind of awkward phrasing because it makes it seem like Trump put means it's bearish for the market, but in this case, it means it's bullish for the market. So in my view, this was my theory. And if you don't believe me, here's the actual alert that I sent out in the Discord timestamped. You can see here, this is this morning at 8:47 a.m. West Coast time, which is 11:47 a.m. East Coast time. I said I bought the SPY 575 call. And by the way, we made 40% on those calls, and I ended up closing them, like I said, before the end of the day. But I said the SPY was hitting the 200-day moving average, which, okay. But here's what I said. Furthermore, this is speculative on my part, but I think we see some softening talk from the administration today, because if we fell below the election level, it'll be perceived as this administration's fault. Now, what am I talking about here, and how did I know that? One, I've been around the markets a long time. Two, we've already lived through Trump's market in 2016 to 2020. So this right here is the election candle, November 5th, right? So in my view, once we started getting down there, not only was this the 200-day, this was the election candle. This is when Trump was elected. So if the market starts falling heavily below this, and I still think it will in the midterm, right? But in the short term, I think we'll bounce. If the market fell significantly below this, then it'll be perceived as Trump's fault, because this is when Trump got elected. Now, we already saw this playbook, not in 2016 to 2020. We saw this playbook this year. So if you guys remember, I don't know, it seems like ancient history now, but there was the beginning of February, was Monday, where the market absolutely tanked. We gapped down, and then we saw a bunch of buying to end the day, and then this created a little mini rally, taking us to all-time highs by the second week or third week of February. It was a 3% gap down, and the S&P fell from 6,115 to 5,925 over a combined 4 hours of trading. So what happened next? It says Trump deferred the tariffs for a month. If you guys remember, there were the tariffs that were supposed to happen soon, and then they got pushed to April 2nd. So they came out and they deferred the tariffs for a month, and the market bounced back to over 6,000, recovering fully a few sessions later. So although they are focused on yields, and they're doing a really good job of dropping the 10-year yield, I must say, which is why we went long bonds, and that investment is doing really well. If you look at TLT over QQQ, you could see that this is up 13%. TLT is up 13% over QQQ this year, a much more superior investment so far. 13% is how much you hope to make in a year in the S&P 500. And I said, and I firmly believed, that bonds were a better investment, at least for the time being, until the administration says that their focus is no longer on the yields. Remember, they're being very transparent. They're telling us this. So I thought that this was another level where the Trump administration is going to look at this and say, man, we better release some good news. Lo and behold, Commerce Secretary Lutnick, here's what he had to say today.
Because he's very, very fair and very reasonable. So I think he's going to work something out with them. It's not going to be a pause, none of that pause stuff. But I think he's going to figure out, you do more, and I'll meet you in the middle some way, and we're going to probably be announcing that tomorrow. So somewhere...
Did you hear what he said? We're going to probably be announcing that tomorrow, some sort of deal with the tariffs. Now, the question is, how long does this last? So the last Trump put that I mentioned on February 3rd, it lasted about 2 weeks and took us to all-time highs. So hitting the 200-day moving average, if the news, obviously I don't work for the administration, if the news is significant, and it is, as a matter of fact, a deal and not something that, Trump doesn't come back and double down, which I personally, at least for the very, very short term, don't think that's the case. I think we see a bounce back up to at least the 100-day moving average, if not a test of this gap right here on the S&P 500, which is right around 6,000, between 6,000 and 6,100, let's call it that. Now, unfortunately, this isn't the only news we have. We also have a major unemployment news this week, but this could actually help. So if unemployment comes in as expected, and it's not higher than expected, that might just boost the confidence a little bit and show that, hey, okay, we're not in deep waters yet. Maybe there's a little bit of relief here. Now, if it comes in higher than expected, then I think bonds are going to go through the roof, meaning yields will come down and that bond trade that we're in is going to go through the roof. Because if unemployment is higher than expected, that means that the Fed is likely going to need to cut and cut soon. And that's exactly what Bessent and Trump want. They want to address yields first. So as I told you guys, I think it's time to be very selective here. There are some really cheap stocks now, cheap relative to themselves as well as relative to the market. So if you look at Google's valuation, it hasn't been this cheap in a very long time, trading at 20 PE. 18 forward earnings. Even though I think there is a little bit more to drop on the semis, it's kind of hard to pass up Nvidia at 26 forward earnings. And ever since I've ever started investing, I've always made a habit of buying corrections on the indices. So I got a lot of questions last video. Why aren't you buying the SPY, but you're looking at individual stocks? Well, because the SPY is not in a correction. The NASDAQ just hit a correction today as of the time of this recording. And if you bought the NASDAQ or the S&P 500 down 10%, you made money every single time. I still like healthcare here. XLV is the healthcare sector of the S&P 500. It's not that it's impervious to drops, but it typically drops a lot less than other stocks during corrections and bear markets because obviously it is a staple industry. If we get back to that 106 level, I'm looking to short AMD back down to get below this. I think AMD is going to go to the double digits. Also ended up shorting volatility because this is one of the easiest plays in the market is when volatility spikes and you don't have any more news for the day like we didn't have on Tuesday, and the market is at a major moving average like the 200-day, usually you will see a crush in volatility as the market finds support and there's no other news. So just a tip for you there. And I still think the biggest fear in the markets is the semiconductor index breaking down. This is likely what is going to drive a lot of pain in the next correction if we get there. So even though I think we're going to get a short-term bounce here because of the Trump put and because of the fact that we're at a very technical level, I think this eventually turns into a correction, not just a pullback. We average a correction every 1 to 2 years. And if you look at this, you can see that the typical duration of the correction is 3 to 4 months. So people think that it's going to be just a very quick down and up. But as I said before, 2018 was anything but. We will get a period where all of the tariff stuff is sort of priced in, maybe in Q2, where we get a nice rally. But I still think that we are going to get at least a 10% drop in the S&P 500 this year. And I still think out of all of the plays that bonds are the play until the Trump administration tells us that they are no longer the play. They told us it was the play. They gave you the playbook. If you want all of my plays in real time, sign up below. Trade live with me every single day. I go live at market open, give you guys the blueprint, what I'm looking at, sometimes take a day trade on the call in and of itself as well. But you also get access to all of my swings, such as the volatility crush plays, the SPY calls or puts, or whatever it is that I'm doing, including the long-term stuff, the long-term outlook. You get that in real time as well, and any swing trades that I take, as well as option selling. So join below if you want to get all my insights in real time. Let me know in the comment section below. Do you think that we're going to get a short-lived rally? Do you think this is the bottom for good? Would love to hear from you. Do you think we're going to get a correction or not? Also, just to address something that I said I was going to address at the end. It's so funny how most of you guys are cool, right? Most of you guys appreciate the analysis because you know that it's coming from 100%. It's objective, right? At least it's objective in my mind. It's not off emotion. It's just off of the way that I'm reading the market and the data. So like I get a few comments of people saying, oh, but I saw a video 2 months ago where you said Nvidia was a good buy. Okay. One, there has to be a distinction between a short-term play and a long-term play. If I say I'm buying calls, here's where I'm exiting. If for take profit, here's where I'm exiting if the trade doesn't work out. Like I even give you guys free short-term plays on these videos, right? That is very different than a long-term play. Now, if you tell me, do you still believe in Nvidia long-term? Yes, of course. But obviously, the economic, political, and financial situation is ever changing, right? So my view on where the market is at a certain point is going to change. So I hope that you guys that are maybe confused appreciate that the analysis has to be up to date and has to be robust. Otherwise, I just turn into one of these YouTubers who's like, buy, buy, buy. I don't care if it's going down. Buy NVIDIA, you're down 30%. Buy more, you're down 50%. Buy more, you're down 60%. Like, it just becomes a clown show. It's not a show that is based in real analysis, giving you guys as valuable of information as I can in as real of a time as I can when I have the time to make these videos. So, you know, I can appreciate how maybe the thumbnails might look enticing to some viewers, but I think that a lot of people that are judging, you know, whether 2 months ago I sent out an options trade on NVIDIA and now I'm saying NVIDIA might go to 100 or Tesla might go to 270. Like, these are two different things, right? One might be a short-term play, one might be a long-term analysis. And what I'm giving you right now is my up-to-date view on the market in these ever-changing factors in a very robust landscape that is not for the faint of heart. And my aim is just to guide you through as best as I can so you're not reacting to every candle like a madman or madwoman, although it's usually the men. But anyway, I just wanted to clear that up. Yeah, let me know in the comment section below. Sign up if you want to trade live with me every single day. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.